And just when markets were feeling good about a Phase 1 trade deal between the US and China being signed soon, another spanner in the works. Investors reeling in the wake of the American killing of Iran's top general, rattling both equities and commodity prices. Safe havens, including gold and the Japanese yen, both rallied, with the gold soaring to a near 7-year high. Now, most Asian currencies weakened as risk appetite dried up, but the yen rose as much as 0.3% to 107.82 against the greenback. That's a 3-month high. It's now holding steady at 108.04. And oil back on its roller coaster, with the Middle East crisis deepening fears of supply. It's breached $70 a barrel, jumping above levels we saw when Saudi energy facilities were attacked back in September. That wiped out some 5% of global output. But as you can see, Brent crude now just below that $70 mark. Now, a quick look at equity reaction across the region. Japan's Nikkei dropped to a 1-month low. Declines also seen in South Korea, where the KOSPI lost nearly 1%. Hong Kong's Hang Seng edged down as well by 0.8%, and the Shanghai Composite ended largely flat. Now, for more, let's bring in Jeffrey Halley. He's a senior market analyst of Asia Pacific at Oanda. Jeff, good to speak with you. A knee-jerk reaction for the first day of markets. Are you expecting further impact to be limited?
I think we've seen the worst of the knee-jerk, so to speak, now. We are seeing some pullbacks in Europe this evening, where the dollar is starting to give back some of its gains, for example, against some of the major currencies. That said, the risk factor has increased, geopolitical risk factor has increased dramatically, and it will be interesting to see here whether oil consolidates its gains around $70 and whether gold continues its march on the $1,600 an ounce level. So I'm expecting a bit of a consolidation and a pause for breath there. But I think unless we see some direct action from Iran in the next couple of days, which I doubt, I think we've seen the worst of it just for now.
All right, well, let's speak about oil just quickly. Prices spell good news for oil-rich countries, but this can have a knock-on effect for business sentiment and foreign investment?
Yeah, definitely. Look, if you can look at around Asia today, we saw the Korea KOSPI take a dive, Nikkei down 2%, all of regional Asia, which are most of which are very dependent on imported energy, all suffering today. So if oil is to remain elevated and these geopolitical risks remain elevated, that could indeed take away most of the benefits that this impending signing of this interim trade deal between US and China are supposed to derive.
Well, away from oil, let's switch gears now and talk about Australia. It's facing economic pressure amid the bushfire crisis that we've been speaking about today. How dire is their economic situation?
It's a little hard to quantify right now. I do believe that it is going to have a serious impact on domestic consumption, which was already dire as it was. We're going to see livestock loss, crop loss. We're going to see people not going away on holidays, so that could flow through to tourism, domestic tourism, international tourism. We're going to see a lot of downstream effects coming through the numbers, I believe, into the new year. And because we do have another couple of months at least, probably, of bushfires ahead of us in Australia, those effects are going to make their presence felt quite strongly in the data, probably all the way through to the middle of the year.
Well, in an effort to help, the Australian government has announced an additional $1.4 billion in funding for bushfire relief. Do you see that number going up?
I think it has to. I mean, these fires have been burning for 2 months, and the government's finally reluctantly opening up its purse strings. I'm actually bemused that $17 million has been raised by people for the Rural Fire Service. Really, the Australian government should be doing that, not all of us around the world, not to denigrate that giving. They've been so far behind the ball here, a vacuum of leadership. So I can only, looking at the damage that we're seeing now and the damage quite likely to come, I think that is definitely a starting number, and that the government, the Australian government, will have to respond fiscally to offset the effects of this, something they probably should have done much sooner than what they are now.
All right, many thanks for your thoughts. Jeffrey Halley there, Senior Market Analyst of Asia Pacific at Oanda.